Imagine an asset that went from being worth mere pennies to surpassing $1 trillion in market capitalization in just over a decade. This is the extraordinary story of Bitcoin, the world's first cryptocurrency, which has defied all expectations and rewritten the rules of the financial world. Bitcoin's rise is one of the most remarkable stories of the 21st century. Created as an alternative to traditional money, it started as a small, niche idea discussed by a few tech enthusiasts on online forums. Today, Bitcoin has grown into a financial powerhouse, with major institutions, governments, and millions of people around the world recognizing it as a legitimate digital asset. But Bitcoin's journey from its mysterious creation to its current prominence in global finance was anything but smooth. It was a journey filled with innovation, skepticism, volatility, and resilience. Bitcoin represents more than just a digital currency. It embodies a movement, a belief that money doesn't need to be controlled by governments or central banks, and that a decentralized, transparent system can serve the world better. The impact of Bitcoin is now felt far beyond the tech community. It has shaken up finance, driven innovation in blockchain technology, and inspired the creation of thousands of other cryptocurrencies. But to fully appreciate what Bitcoin has become, we need to look back at where it all began. The story of Bitcoin begins in 2008, when a mysterious figure, or possibly a group, using the name Satoshi Nakamoto, published a white paper titled Bitcoin, a Peer-to-Peer Electronic Cash System. Nakamoto's vision was to create a decentralized digital currency, free from government control, that could be sent directly between users without the need for a financial intermediary. On January 3, 2009, the first block of the Bitcoin blockchain, known as the Genesis block, was mined by Nakamoto, awarding him, or them, 50 Bitcoins. This block carried a hidden message. The Times, January 3, 2009 Chancellor on brink of second bailout for banks, a reference to the global financial crisis that had shaken the world. It was a clear signal that Bitcoin was born in response to the failures of the traditional financial system. At first, few people paid attention to Bitcoin. The idea of a digital currency that wasn't backed by any government or tangible asset seemed far-fetched. Skepticism was high, and even within the tech world, many were unsure whether this experiment could succeed. Bitcoin's first few years were marked by a slow but steady growth in interest, mostly from tech enthusiasts and cryptography experts. One of the most significant early milestones occurred on May 22, 2010, when Laszlo Hanyecz famously purchased 2 pizzas for 10,000 Bitcoins. This event, now known as Bitcoin Pizza Day, marked the first real-world transaction using Bitcoin, and highlighted both its potential and the massive volatility that would come to define its early years. In today's terms, those pizzas would be worth hundreds of millions of dollars. As more people began to take notice of Bitcoin, the first exchanges emerged, allowing users to buy and sell Bitcoins for traditional currency. In 2010, the first Bitcoin to dollar exchange rate was established by New Liberty Standard, valuing 1,309 Bitcoins at $1. This was the beginning of Bitcoin's journey toward mainstream acceptance, though the road ahead was still filled with many challenges. In 2011, Bitcoin reached parity with the US dollar, and its price continued to rise as interest grew. At the same time, Bitcoin began attracting attention from the darker corners of the internet. The infamous Silk Road, an online black market, used Bitcoin as its primary means of exchange, which led to Bitcoin being associated with illegal activities. This negative publicity raised concerns and attracted the scrutiny of regulators. But it also demonstrated the real-world use case of Bitcoin as a currency that could bypass traditional financial controls. Throughout this period, Bitcoin's price remained highly volatile, fluctuating wildly as it experienced cycles of boom and bust. For example, in 2013, Bitcoin's value surged to over $1,000 for the first time, only to crash back down to around $200 by early 2014. These dramatic price swings became a hallmark of Bitcoin's early years, leading some to dismiss it as a speculative bubble destined to burst. But even as Bitcoin faced these challenges, it continued to grow in both popularity and legitimacy. More businesses started accepting Bitcoin as payment, and Bitcoin ATMs began popping up in cities around the world. By 2017, Bitcoin had firmly established itself as the leading cryptocurrency, with its price climbing to an all-time high of nearly $20,000 by December of that year. This remarkable growth was fueled in part by the explosion of interest in blockchain technology and the rise of thousands of other cryptocurrencies, often referred to as altcoins. However, this rapid rise also led to concerns about a potential bubble. And indeed, 2018 saw Bitcoin's value crash once again, falling back to around $3,000. Despite this, Bitcoin's underlying technology continued to evolve. Key developments like the SegWit protocol and the Lightning Network helped improve Bitcoin's scalability and transaction speed. addressing some of the key criticisms that had been leveled at the cryptocurrency. Bitcoin's journey has been far from easy. Since its inception, Bitcoin has faced numerous challenges, both technical and regulatory. The early years were marked by security breaches, most notably the infamous hack of the Mt. Gox exchange in 2014, which resulted in the loss of 850,000 Bitcoins and shook confidence in the fledgling cryptocurrency market. Mt. Gox's collapse led to increased scrutiny from regulators, who began to see Bitcoin as both a potential threat to financial stability and a tool for illegal activities like money laundering and drug trafficking. At the same time, Bitcoin's decentralized nature posed unique challenges. The question of governance, who, if anyone, controls Bitcoin, remains a contentious issue. Disagreements within the Bitcoin community have led to several forks, or splits, in the Bitcoin blockchain, resulting in the creation of alternative cryptocurrencies like Bitcoin Cash and Bitcoin SV. These forks were driven by differing visions for Bitcoin's future, particularly around issues like transaction speed and scalability. Regulatory uncertainty has also been a major hurdle for Bitcoin. Many governments have struggled with how to classify and regulate cryptocurrencies, leading to a patchwork of regulations around the world. In some countries, Bitcoin has been embraced as a legitimate asset, while in others, it has faced outright bans. Despite these challenges, Bitcoin has proven remarkably resilient. Over time, it has evolved from a speculative asset used primarily by tech enthusiasts to a recognized store of value embraced by major financial institutions. The introduction of Bitcoin futures trading on major exchanges like the Chicago Mercantile Exchange in 2017 marked a significant step toward mainstream acceptance, providing institutional investors with a regulated way to engage with the cryptocurrency. One of the most important developments in Bitcoin's recent history has been the increasing adoption by large companies and financial institutions. In 2020, major corporations like Tesla made headlines by purchasing large amounts of Bitcoin as a reserve asset. Tesla's purchase of $1.5 billion worth of Bitcoin and its announcement that it would accept Bitcoin as payment for its products sent shockwaves through the market, pushing Bitcoin's price to new all-time highs. Another key moment in Bitcoin's history occurred in 2021, when Bitcoin was officially recognized as legal tender in a country for the first time. El Salvador became the pioneer in this bold move, signaling a new chapter for Bitcoin's global use. While some viewed this as a groundbreaking step toward integrating cryptocurrency into the fabric of modern economies, others expressed concern over the potential risks involved, particularly for a developing nation. Nevertheless, this decision marked a significant turning point, demonstrating that Bitcoin had evolved from a digital asset to a viable currency option for everyday transactions. Technological advancements have also played a crucial role in Bitcoin's ability to overcome its challenges. The Lightning Network, for example, has made it possible to conduct faster and cheaper transactions, addressing one of the key limitations of Bitcoin as a payment system. Additionally, the implementation of Taproot in 2021 improved Bitcoin's privacy and efficiency, showing that even after more than a decade, Bitcoin's underlying technology continues to evolve. As Bitcoin has matured, so too has its place in the financial ecosystem. More and more institutional investors are embracing Bitcoin as a hedge against inflation and a form of digital gold. The launch of the first Bitcoin exchange-traded fund in 2021 was a significant step in this direction, providing retail investors with an easier way to gain exposure to Bitcoin without having to directly buy and store the asset. Bitcoin's rise from an obscure digital experiment to a global financial phenomenon has been nothing short of extraordinary. It has weathered skepticism, volatility, regulatory challenges, and technological hurdles, emerging as a legitimate asset class with the potential to reshape the financial world. Bitcoin has changed how we think about money, decentralization, and the role of technology in finance. Its impact goes beyond just being a digital currency. It has sparked a revolution in decentralized finance and inspired the creation of countless other blockchain projects. As Bitcoin continues to evolve, its legacy as a pioneering digital asset is secure, and its influence on the financial landscape is undeniable. If you found the story of Bitcoin's rise fascinating, you might enjoy learning more about the history of money. Be sure to check out the next video on the screen. Thanks for watching.